We grew into mixed-use multifamily. From there, we got into ground up and commercial. And then a couple years back, the whole non-QM craze started, and the rates are actually almost back to where they were a couple years back.
Wow.
Yeah. So, but it's been a crazy trip. Over three and a half, about 3,500 projects funded, and it's fun. It's
3.2 billion in how long?
3.2 billion, I think, in about like 4.5 years.
Wow.
So the company launched, yeah. So
that's big volume.
We're in Houston right now, walking our new 56-unit crazy property here. It starts down there.
We got Allon, Avgi, billion-dollar man.
Welcome back to the Talk Shop Podcast. Today's guest is Michael Ramin, one of the owners of Sharestates, lenders, hard money, non-QM lending. They've done a ton of deals with me. I've done a ton of deals with them. Every time there's a problem, I call Michael himself. Michael, please introduce yourself.
Michael Ramin from Sharestates. We are a direct private lender. We've been doing this about over 8 years now as Sharestates, and there's a whole history behind it. You want to hear the whole history?
Go for it.
Whole history. We launched, two of our partners actually about 20 years ago launched a title insurance agency. Before that, they were actually flipping homes. They were clearing really bad title for themselves. So they were finding homes everywhere, estates, foreclosure, short sales, etc. And they were finding deals, and they were able to find ways to clear the title however they had to buy the properties. A lot of people came up to them like, how are you guys clearing the title? And they're like, we should get in the title insurance industry. They got into title insurance, kept growing the company, went from New York State and kept growing, so grew nationally. So it's in 34 states direct, which is the most you can be in direct without having like locations and all that. Grew that company. They were always putting together speculators, lenders, developers, anyone who needed financing, needed to find deals, needed funding. So throughout the years, they built a pipeline of lending money themselves. Fast forward, one of our partners, his brother-in-law, graduates law school, and that's Allon. So Allon.
Great guy.
Allon Scheinfecker graduates. He's a brilliant dude. So he graduates law school, and he speaks to his brother-in-law and other partner Ray, and he's like, love you guys, but I don't love title insurance. He's like, what else is this? And they had the idea of a syndication platform, and we launched Sharestates. So Sharestates was originally a real estate equity syndication platform. We started putting together equity deals, and our investors love the concept. They love the idea you can buy in for small amounts, but they didn't like the idea of waiting for equity or waiting whether it was 2-3 years for a project to be finished to recapitalize.
What year was this?
This was about 8 years ago, 9 years ago. So from there, we converted the platform to debt, and people were a lot more receptive to it.
But it's been private money the whole time. It
So
hasn't
Sharestates
been like
itself,
conventional.
No, we've never been conventional. We were always in real estate syndication, and then it kind of switched over from equity to debt, and then we grew the debt platform. So we're working with friends, family offices, and as originations grew, we had to find a way to scale the company, and that's how we went institutional. So since we became institutional, on the bridge lending side and non-QM, we've done a little over like 3.2 billion in financing.
How much are you doing a year? 2021.
2021. So that was 2021 was like a half COVID year.
Yeah.
So it was like half of normal we did. So I think it was like in the 600-700 million range. Before that,
You did like 25 million with me.
we've done a lot. So thank God it's been a great business. We started in that 1 to 4 family space. We grew into mixed-use multifamily. From there, we got into ground up and commercial. And then a couple years back, the whole non-QM craze started, and the rates are actually almost back to where they were a couple years back.
Wow.
Yeah. So, but it's been a crazy trip. Over three and a half, about 3,500 projects funded, and it's fun. It's
3.2 billion in how long?
3.2 billion, I think, in about like 4.5 years.
Wow.
So the company launched, yeah. So
that's big volume.
Big volume.
So how fast has the staff grown? How many people do you guys have on the processing end?
So in-house, just in general, a little over 100 people now for Sharestates. Everything is done in-house. So from deal sourcing, origination, processing, underwriting, loan sales, and servicing.
Since I've worked with like any other of your competitors, every other competitor that I've worked with, I have to say your processing department is by far more superior than anyone else. By far.
We've had a lot of testing in the last couple of years on what works and what doesn't. It's also to find out when it transfers over to servicing. I think it's very important. So when you have a borrower, give you an example.
Servicing.
Fay is not ours. We have investors loan servicing. So on the bridge loan side, we service all of our loans in-house.
Okay.
So the idea behind that was if you were a fix and flip guy, to transfer your loan to another servicer, and then you'd have to call them. Then they don't know much about your deal, and then you're trying to do a draw, and they're like, okay, cool, this is my draw budget, but I don't know you. So that idea didn't sit well with us. So we wanted to service it in-house, so they can always call the originator, call the borrower, talk it through if there's any issues with their budget, getting the draw out to them, getting an inspection done, if they had a change order.
Who approves draws?
It's in-house. Our own draws department approves it. So we send out inspectors.
Explain what a draw is, please.
So on any construction project, whether it's a fix and flip, value add bridge, or ground up, borrowers are going to have a rehab budget when they're submitting their loan application. And the whole idea is to get that construction money to them so they can finish their project and refinance out or sell the property. Typically, on most budgets, if someone's doing a small budget, small budget we'd consider anything from like 10 to 50,000. They might finish the whole budget and then do one completion draw and get all their money out. A lot of guys have larger budgets, so anywhere from 50 to, if there's someone doing a gut renovation, let's say anywhere up to 250,000 in a home in Long Island, or a ground up home that would be maybe around 400,000. Yeah. They'll use anywhere from 4 to 6 draws. So they'll call an inspection company, they'll show that work was done, they'll sign like a lien waiver, and they'll follow the line items and say, Allon just finished X, Y, and Z, let's reimburse him for this amount.
Yeah.
And then you move on with your project.
Yeah.
So works pretty fast on the draw process these days, so it's gotten quicker, which is great.
And who approves them?
We approve them in-house. So once the inspection comes back...
So there's someone specifically there that approves or declines draws?
Yeah, you can call them, you can email them.
Do you guys ever deny draws?
We've gone through draws and people will say work was done and it's not.
Yeah.
So you don't get reimbursed for it, but it happens. I think the draw process has probably changed the most since the inception of the company till now. At the end of the day, there's always a few bad apples that mess it up for everybody. It was a lot simpler. People maybe weren't looking into it as much, but people did take advantage, so they did change it, become more stringent.
Let's talk about the psychotic rate market right now and how you managed to stay level-headed with this craze going on. You were quoting me 3.75% this time last year, and right now you're quoting me 5.35%. What happened?
A lot of things happen. I mean,
not like it's directed at you. You just.
I woke up one morning. I was giving everyone high rates.
Fuck Allon. He's done.
Markets change. So whether it's the treasuries, the interest rate swaps, securitizations, a lot of it hit volatility. And you saw, I think when it came out with inflation was rising too fast, they raised rates, and it changed everywhere. Whether it was conventional financing, whether it was non-QM financing. Yep. I think the only thing that hasn't changed yet, but they're saying it's going to spike up, is the institutional rates for bridge financing, which a lot of people I think will be upset about that. Hard money, maybe 5-6 years ago when we started the business.
Hard money's going down.
Hard money's going down right now. You might see it jump up again.
Why?
Same reason, cost of capital. Cost of everything's going up, right? How much is a gallon of gas?
I don't know.
Wait till you fill up the Raptor tomorrow.
It's a little, yeah. I go to the fill-up one down the block, they do everything for you. I just go over there, give them my credit card. I've shopped out the gas. I'm done. I don't want to look at these prices anymore. They just keep going up. And it's not like I have a choice. We're going to have to fill our tanks anyway.
You have to fill your tanks anyway. I said the same thing to someone else today. At the end of the day, you're going to go to the supermarket, and if you need eggs, if they're $5 or $7, you're going to buy eggs. Mm-hmm. You need them in your house. You need financing for your deals. The rates are always going to fluctuate. They're going to change. 3 years ago, people were paying anywhere. We just refinanced people that were in 5-year interest-only loans they took with us. 3 years ago, the rates were around 6 to 6.5%.
No way.
And they took those same loans out. And I kept telling them, these rates aren't going to last forever. I said, if you
told
can
me
refinance,
that 100 times.
Told you 100 times. I called everyone. I said, this is going to go up. And people were able to refinance. You purchased homes at around 4% at 80%.
And I refinanced a ton with you guys. Maybe 14 homes.
14 homes. People took advantage of it. You were able to cash out for a small amount. Same thing happens. Rates go up again. People take it. They come down again. You refinance out. The Fed's saying that just on regular rates and conventional home rates that they're going to raise another 3 times this year, and each time about 25 basis points.
Sounds like a party.
Sounds like a party.
It's fun.
For your business, I think it works well. You guys have a lot of rentals. At the end of the day, the rates are still going to be high on that, but if homeowner rates are higher, I don't see people buying as much. Yeah. But I could be completely wrong.
I mean, that's basic economics, right? Throughout history.
Yeah.
Rates go up, home sales go down.
Home sales go down. Usually they say values go down, but this is the first time rates have gone up and values are still going up.
Yeah.
So this is fun.
But it's also like the supply chain's totally messed up. So
Yeah.
materials keep going up and prices to build homes keep going up.
But people keep building. Ground up products have been the most popular.
Really?
With shortage of homes, ground up, whether it's been single families. Since we're national, you get to see a little bit different everywhere. So you go places like North Carolina, you see like ADUs, accessory dwelling units, just became legal there. So if you have a single family home, there's a shortage of homes. Similar to California, you can build now a smaller home in your backyard and rent it out. Or you could build a 2-unit, believe it or not, in the back of your single family and rent it out.
Wow.
So the ground up on that's becoming popular. You got areas like Nashville that are blowing up. So the multifamily space, you see all these massive multifamilies going up. But if you go into Nashville, you see a lot of like row townhomes, 3-story townhomes. And whether they're being used for Airbnb, people that are moving to the city, very popular. And it's continuing. It's not stopping.
Yeah. Actually, I think I was going to reach out to you if this deal goes through. I was definitely going to reach out to you. I'm working on a 4-plex in Houston, and in the backyard, you could build 14 units, 3-story row houses in the back. So that's like a perfect bridge product.
We had someone else just now in California submit an application. They're buying an 8-unit multifamily, and in the back of the house, they can build 8 other units. And at that point,
crazy.
Shortage of housing. It's not cheap. I mean, the 8 units they're buying that are distressed, it's $4.5 million in contract.
Wow. That's expensive. So that's a high-end project.
It's not a high-end project. It's just expensive in San Diego. For the rehab to add on what they're buying they're adding 4 units to. The rehab budget's about $650,000, and that includes rehabbing the existing units. And there's another one where they're adding 8 units, and the rehab budget there's about 1.2.
You guys still have your investment platform open?
Yeah, you can actually still come onto our website and invest in our debt.
I like how you look directly at the camera. You're like your target audience. If you're listening to this,
Bring it in.
how much money do you have?
You know, it's funny. When we started that, a lot of people, like friends and family, they're all like, "Oh, I'm just gonna put money in. You're gonna pay me back something." And I was like, "Yeah," and it's worked out. We've had investors come in from starting with friends and family to when we first launched the company. We actually had a Business Insider article about us.
No way.
Yeah, and people just started like registering to the website, and I think it's very important. And you'll see like on different comments people made, you have to be in touch with your investors. You have to tell them what's going on if a project goes. At the end of the day, it's accredited investors, so they know nothing's guaranteed, but we try our best to make it the best experience possible.
What type of returns are you guys giving off?
So it really depends. It goes with the same institutional markets, so you're getting anywhere from 8 to like 13% on your money annually.
Wow.
So it's not bad just being in debt. It also gives people access to splitting up that debt. If you were in a if you're an accredited investor or just an investor yourself, and you wanted to give out hard money to somebody, you would have to have a minimum of $200,000 plus to give them for one house.
Yeah.
Right like that. If you have $50,000, you can split it between 10 loans, not have all your eggs in one basket.
What's your minimums?
It's $5,000 for a project. So that's why I kind of use that. But you can have $5,000 into each property. You're not putting all your eggs into one basket. You can diversify your risk, whether you want to be in a fix and flip, a multifamily rehab, or a commercial bridge, and you have all those options on the website. So it's pretty cool.
That is cool. We put the website up here.
Yeah, it's up on the screen.
Rental loan starting at 4.65. Damn, rates are up. But the fix and flip has gone down.
Fix and flip has gone down. Very popular. So right now we saw applications go up on that. With moratoriums ending, auctions back open. So if you've been going to like the Nassau and Suffolk auctions and Queens are going to be done outside now.
Yeah.
So those are popping up again. And you're seeing it out of state as well. And you see the auction websites, they're starting to pull triggers again. And I had several borrowers of ours we've been working with since day one that had contracts for like 3 years on estates that they're waiting for the courts to make a decision. And they're finally able to like close, so they're asking to like move forward with their term sheets.
I got to give you a nickname, like Michael Making It Happen Ramin.
It's Slammin' Ramin or Mike Lonowitz. You can take your pick.
Mike Lonowitz. I saw that's your Instagram handle, right?
It's my Instagram. I'm not like you. I wish I had the time you guys have. Like, I know you don't have the time because I call you in the middle of the day. You're on like a plane or you're kite surfing somewhere.
Yeah, but you called me from the plane.
I've called people from planes.
You called me from a plane.
Yeah.
You were like, I'm going to Nashville. I'm like, I'm going to Houston. And we were both on a plane.
I've been on a plane a lot. Since we started the company, I used to go to all the conferences myself.
You're traveling like crazy. And honestly, you're involved in the marketing so much. Every time I see you, you're at a different booth or going somewhere. You guys sponsor tons of events.
Yeah, so we try to go to conferences, trying to get the brand recognition out there.
I think what sets you guys apart is, one, you make deals close. Deals close with you guys. You know, I've seen other lenders, bridge lenders, non-QM guys that it's been a delay or it's tough, 6 months, and they don't push it through. The processing isn't there. You guys have that. And you're marketed extremely well. Like, you're really on top of it. You're out there. and you just do good business. Oh my God, there's so many compliments. There's too many
I gotta give it
compliments.
to you guys also. So we're gonna give out compliments now, like what you guys have done in the last couple. I would say in the last year, but last couple months also. Just watching the content creation, and outside of that, the contracts, showing people, teaching how you do it. I've seen a lot of influencers out there and guys that are creating content, and it's really cool because back in the days, you would think like, why would someone share their secrets of how they either source deals, how they get deals, or move it from one end to the next? And it's cool that you guys share that because at the end, first of all, everyone's like, oh my God, you're a hard money lender. You're gonna tell everyone how you operate. I'm like, dude, there's plenty of deals. At the end of the day, there's gonna be deals for everyone. Not everyone's relationships are gonna match up.
And there's plenty of hard money lenders.
There's plenty of hard money lenders. You've probably worked with several over the years. This is a relationship business. Showing other people how you do it doesn't mean you're not going to get deals. At the end of the day, it's probably going to get you more deals.
Yeah.
Someone's going to go out there, find a deal, and they're going to get excited, but they won't know how to do it. They're going to send it to you. So,
Dude, we are overloaded with deals.
that's awesome.
Most people can't find deals. They're having a tough time in the market. We can't breathe. Like yeah.
I had a phone call today, and someone's like, yeah, there's no inventory, or I used to buy on this block. And I used to buy for 200 and it's 300. I'm like, prices change. Like,
that's it.
You have to adjust with the market.
Yep. Yesterday's price isn't today's.
No.
That's why when you were lending to me at 3.95, and that was literally like 3 months ago.
Yeah.
You were lending to me at 3.95. Now you just sent me that term sheet at 5.35, which I think there's room to come down, but that's besides the point. And actually, I think Phil's going to send you something tomorrow. Another non-QM lender, Salmon Capital, gave us at 5%, same deal. So I'm just going to send it to you guys, see if you match it or figure it out.
Figure it out. Good at figuring it out.
But look, remember the last time I got a term sheet, you guys couldn't match it. I was like, okay, I'll go forward with them. I went forward with them. We closed tomorrow. 4.25, locked that in like 3 months ago. Thank God I locked that in.
That's amazing you locked it in.
But it was the prepayment penalty. You remember? I was willing to pay you 4.5, but they were offering like 1 year prepay.
So they've made adjustments now, so you're able to get like lower prepays now too, which is cool. So you get lower or higher to adjust your rate.
A prepayment penalty is if you want to pay off a loan prior to a certain amount of time, you have to pay the bank points. So if it's a 3-2-1 prepayment penalty, which actually, let me rephrase that. If it's a 5-4-3-2-1, which is Mr. Sharestates' favorite prepayment penalty, and you want to pay in year 2, then you have to pay 4 points. So 4% of the total loan amount. Fake news, please clarify.
No, because we have different options. You could have, if you have a 30-year fix to get a better rate, you would have to be at like a 5-year prepayment penalty, which would be a step down. If you're at like a 5-year interest only, they typically have like a 3-year prepayment penalty. A lot of them have taken the prepayment penalties up to give the loans more value now to issue lower rates.
Yeah.
So you're going to see a lot of that.
I think they just gave me that to win my business.
That's possible. I'm hopefully they close it at that.
I haven't gotten the bank docs yet, so I really hope they close it at that.
If not, we're going to have to edit this podcast, and then we're going to...
Yeah, and curse them out.
Part 2.
But in all seriousness, you guys are by far my favorite non-QM lenders, no question. I actually tell people that on the phone. It's almost insulting when I talk to them. I'm like, listen, you can't do it. I'm going to Sharestates anyway. So I'm like, and I tell them straight up, yeah, it's the truth. What is there to hide? I tell everyone, I hide nothing. I'm not loyal to any of you. Whoever is the best to work with, I work with them. Whoever gives me the best deal, I work with them. End of story. Why would I lie?
No, it's true.
Right?
Yeah.
At least I'm going to tell you the truth to your face.
I appreciate it.
So you couldn't do it last time. I told you. Every time you get my deals, no matter what. You guys always get my deals because you're my favorite people to work with.
I appreciate that.
Yeah, and you make life so much easier when we do work together. Actually, I'm willing to sacrifice on rate just to work with you guys. I've done it 3 times.
We've had people do that, yeah, because we close. I think closing
every time.
It's a lot more important.
And then there's other non-QM guys that just try and take advantage. You guys never try and take advantage.
No.
Like I've seen people just pull the rug out like at the closing, and they're like adding a point. You know, they add a point right the day before the closing. They handcuff people. That is so wrong. Somebody tried to do that to me.
Yeah, it's not a good way to do business. The only time I think we've ever had to change rates was because of what happened recently with the market volatility. Outside of that, and it works a little different. Everyone thinks your rates are locked in the conventional market as well. if you're doing a refinance, you're typically closing in 2 weeks, so your rate is fine. It's not
Yeah.
really going to adjust much. If you're purchasing a home, you're locked in for 30 days from when you get your home contract, you lock your loan for 30 days. If title's not clear, you've seen on Long Island, so you guys are buying in Suffolk. If you could try to get title done in Suffolk right now, how long are you waiting for a title report? About 2 weeks?
Even longer sometimes.
3 weeks, right? So
Yeah.
now you got a loan locked for 30 days, and your title's not back for 3 weeks. Now you're going to the seller to clear a title.
Yeah.
At this point, your lock is gone. So if you're a conventional home buyer and you had a rate locked in at like 2.7%, so you went back to your bank, rates never fluctuated that much. But now your lock expired. You go back to the bank, and that same house you're buying is at 3.75 now today.
Wow.
Or 4.25.
Wow.
And that happened in the conventional market. Everyone's like, no, I had my rate lock. You did. On a purchase, a lot harder. On refinance, it's tougher to deal with, but it changes. But to get the rates we were giving, it was in bulk.
Where do you think rates are going up to right now in the non-QM world?
In the non-QM world, I think you're going to be back to that 6 to 6.5 mark.
Wow.
On 1 to 4 family.
Seriously?
On mixed use and multifamily, it's already there. A lot of people pulled the programs. At the end of the day, places you're buying, middle of the country, your DSCR is like 2.5. So from being at a 5 to a 6.5, your deal still works. These loans were created a lot of the times for those product. It wasn't for like.
But is this 80% loan to value you're talking about?
This is still on an 80% loan to value on a purchase.
If you're dropping down to like lower LTV, say 70%.
70%. I think the rates will still be up, but I think your DSCR is still going to work. I mean, obviously it's
The
lower.
DSCR works no matter what in the middle of the country.
Yeah.
Right. Cause like
Lower
you just said.
taxes, lower values, higher rents. It makes sense. It works out.
But how much will it impact the rate? Like if it's 6.5, let's say it gets there, that's the peak.
I think 80 is going to be the highest on a purchase rate wise, and on a refinance, I think the best rates are going to be at 65 to 70% on a refinance, either rate and term or cash out. When you get up to that 75 to 80% refinance rate, those are going to be the highest rates, I think, on this product.
Do you think LTVs are going to go up? Like 80% came out of nowhere, I feel like. 2 years ago wasn't a thing.
No, we had it 2 years ago.
Did you?
2 years ago on a purchase?
Yeah.
On refinance, you don't really see it.
No, refi, you don't see it.
A couple years back, we were doing rate and term at 80 and cash out at 75. It was there.
What's stopping like the loan to values from going up? Like to 85
right now?
on a non-QM.
I think it's just the guides are making on it. I don't think they want I think the risk goes up when you raise the rate to that. Just because you don't see it offered out there, I wouldn't say it's not available.
Okay.
It's probably out. It's out there. I've seen it on a lot of the matrices or guidelines from loan buyers.
Yeah.
I don't think a lot of people offer it because your DSCR is probably never going to work because the rate takes such a hit.
Even in the Midwest?
Even in the Midwest, because you would be in that like 7% range. This is hard money.
Yeah.
I don't think it would work.
Oh, I see. Rates go up.
The rate takes it took a pretty big hit when it adjusted to that.
Got it. And before we stop, let's talk a little bit about your philanthropical ventures, what you have going on. Your philanthropy world. I know you love that. I want to talk about it, and people are going to listen, so you may as well.
All right, awesome. It's funny you bring it. It's not funny you bring it up. It's actually great that you bring it up. So several years ago, it's actually crazy how this started. We started about like 6, 7, or even 8 years ago. We hosted a poker game in our office for a whole bunch of the guys we worked with.
Yeah.
So a whole bunch of guys came in. We did it at the end. The guy's like, yo, everyone should put a little bit of money and send it to charity. The next year we did it again. The same guy said it. And he was like, we should take half the pot and give it to charity. So the next year after that, we made it a charity event ourselves. We got a whole bunch of people to play poker. I think the first year was like maybe 20 or 30 guys. It wasn't big, but it was a lot of guys in real estate that were looking to spend money. We bought prizes ourselves, so we sponsored dinner, all the prizes ourselves, and all the money that went towards charities. So we started growing it, and from there it started Share for Kids. So through Sharestates, we have a 501c3 fully nonprofit. There's nobody on salary on Share for Kids.
Wow.
And all the money that comes into the events goes out to the charity. So we raise money for Sunrise Day Camp, which is out. There's one in Suffolk. There's one upstate. I think Maryland. 2 in Israel. Everywhere else. Sunrise Day Camp provides free day camp to kids with cancer and their siblings.
I have the chills.
So
it's awesome.
That's awesome. We do Friendship Circle through Chabad. They provide free assistance to families with special needs children. So people that have less experience or they need help with their kids or learning more about the situation. We do St. Mary's Children's Hospital. We have JCM, the Jewish Children's Museum, and a bunch more that throughout the year we give out to help any cause that can help children out.
I love that.
So,
what's the website for that?
Shareforkids.org.
With a 4 or like FOR?
No, a little 4.
Okay.
Yeah, we had to make it look cool for kids.
Share for Kids.
We do a lot of cool events. Now that hopefully this COVID thing hopefully will be behind us.
And you just had a newborn.
Just had a newborn, number 2.
Nice.
House is full of girls. Good times.
You're a girl dad. That's
girl
awesome.
dad, yeah.
Good for you,
I
man.
sit there all day getting yelled at. It's fun. But having a good time.
Anyway.
When are you having kids? I'm going to be there.
Every time we talk, you hit me with this question. When are you going to get married? When are you having kids? I feel like it's a second father.
It helps you stop asking to lower rates. You're like, I got to go. I was like, perfect.
Ramin, what can we do together, man? Anything out there you see us doing together in the near future?
I think I think your business has shifted. I think it's some things that we're going to be able to do together. I mean, I know you were in the non-QM, the fix and flip space, but you guys buy everything.
Yeah.
And some stuff that doesn't fit your bank financing is going to ending up in our bridge space. Whether it's the retail strips I see you guys working on, commercial strips, a multifamily like value add where you're buying it and putting some money into it to either raise rents or add amenities.
Yeah.
Those are a lot of products that we offer that you haven't used yet, and
Yeah.
I think you're going to pivot towards that.
I think so. Out of state.
Out of state is definitely great.
In state, you see, I just got this line from a credit union, and they're like, we're going to give you up to $18 million in loans at 75% LTV at 3.75% interest. No prepays, no nothing. And you have to up to 18 million. If you hit everything, we're going to review everything, all your books, your data, like what's going on, your management. We're going to pull reports, and then if it works out, we're going to go up from there. So they don't care if it's value add or anything. It's like a bridge loan.
That's awesome. But
I
only
can't
in New
believe
York?
it. Only in Long Island.
Only in Long Island.
Yeah.
I think I know who it is, but I'm not going to say it.
Yeah.
Actually, I do know who it is.
I actually definitely cannot share who it is. Like, yeah.
All right.
They made it very clear that I should not be sharing who it is.
So that's definitely a great product. I think nationally, I've been seeing a lot more of this. So the old shopping strips, at the end of the day, a lot of people are like, oh, it's either going to big box stores or people are going to order it from Amazon. I don't think you can get all that stuff on Amazon. You can't go to a dry cleaner on Amazon. You can't go to the nail place. You can't go to like the CVS or the drugstore. You can get it, but it's not the same. People want it right away. I know there's delivery services for all that, but the hometown shopping strips always do well.
That's why I'm buying a lot of mom and pop retail right now. We actually have a closing next week. I'm buying a Handy Pantry shopping center. You know Handy Pantry?
No.
They have like 13, 14 locations in Long Island. They're like anchor grocery stores. Small though, local. And then it usually comes with like a vape shop, a barber shop, a salon. And I'm buying those, 2 of them this month.
But it's exactly the things you can't order online.
Yeah.
You can't order a haircut.
Yep.
You can. You probably buy that vacuum with the thing that cuts your head.
You see Amazon's opening salons now.
Are they really?
Yeah, they opened the first one. I can't believe it.
It's in a shopping strip or like what?
No, it's like a standalone store.
Wow.
All the products are from Amazon. They're all Amazon products.
And there's someone in there to cut your hair.
Yeah, like
wow.
a fully staffed place. It's all autonomous. Like you walk in, you make the appointment through Alexa. Alexa lets you in. It's this whole thing.
That is crazy. I really don't think this.
I'll show you after this podcast. We'll pull it up. It's like the first one opened in London or something.
Well, they had it with the stores also, and I don't know how that took off or not, where you put everything in your cart and walk out and it just
And they're
charges.
still doing R&D. I heard they're like north of 2.5 billion in R&D in that space. Imagine how they're going to dominate the supermarket industry after that launches fully.
Yeah, I guess you can't even go into CVS and do a grab and run anymore. It's gonna scan it on your way up. So
Anyway, dude, this was awesome. You're the man.
all right, thanks a lot. Thanks for
for
having
coming
me.
on. Hell yeah.
For sure.